Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hello, and welcome to Business Line's State of the Economy podcast series. This is the fifth of the podcasts focusing exclusively on the equity markets, and this series is coming to you regularly every month. Bringing insights from market experts is your host, Parvata Vardhani. I am the editor of BL Portfolio, Business Line's Sunday feature on investments and personal finance. The expert speaker for this month is Mr. Sumit Jain, Deputy Chief Investment Officer, ASK Investment Managers. Mr. Sumit Jain has over 16 years of experience in Indian equity markets, and he currently manages the India Entrepreneur Portfolio at ASK with a total assets of over $2.5 billion. He has also been instrumental in building the proprietary valuation model at ASK. Sumit has previously worked with ICICI Prudential Life Insurance and First Global Securities. Hello, Mr. Jain. Welcome to the podcast on markets.
Yeah, hi, Vardhini. Thank you for having me here.
It's great to have you, sir. We are at the end of 2023 and the outlook for 2024 is all over the papers, all over our news websites and all that. So it's a very good time to have you on the podcast on markets, I guess.
Thank you, Vardhini.
One thing when I was going through your profile, one thing that interested me a lot, and this is also a good time to talk about it, was that you were instrumental in building the proprietary valuation model at ASK Investment Managers. So now, how does your model work, sir? And more importantly, what is it indicating for India currently? How are we valued right now?
So, Vardhini, see, we are actually investors who typically would invest into businesses from a very bottom-up thought process. Our business models or our valuation models are company-specific and not necessarily related to India Incorporate. And the way we look at any business is, or any value is, dividing total business value into two. One is value of the business as it is and value of growth.
Okay.
Value of business is nothing but if the business is able to maintain current cash flows, what would be its value? And value of growth is the incremental growth adjusted for the cash that would be required to get that growth is nothing but value of growth. And total value is summation of the two. Okay. What this allows us is to really know what is market pricing in. We can calculate what is the implied growth. At what rate should this business grow to justify the current market price? Similarly, we can also calculate if this business were to grow at the rate at which we think that this business will grow at, what is our implied return expectation from this business? So at the current point in time, when markets are not necessarily cheap, obviously you tend to find businesses wherein implied returns are relatively lower as compared to what you would like to see. Having said that, given the kind of growth that we envisage in the country, we can find still enough businesses where implied return would still be pretty decent over a long period of time.
Okay. So essentially what you're saying is although the markets have run up since earnings have grown pretty decently, the market is not overheated. That's what you're indicating.
That is right. We believe markets are a function of longevity of growth. And if we continue to see decent earnings delivery by India Incorporate, we should be relatively decent from earnings compounding perspective and thereby value creation as well.
Okay. I did have that question, sir, since you spoke of earnings delivery going forward. So what are your actual earnings estimates for the Nifty for FY24 and FY25?
See, FY24 is going to be pretty decent year from earnings growth perspective. We may possibly see low 20s kind of earnings growth at Nifty level. And thereafter, over a long period of time, we believe anywhere between 12 to 15% is the kind of earnings growth that Nifty can deliver at the current point in time.
Okay. So that is beyond FY24. That's what you're saying.
Yes.
Okay. And what do you see as, key headwinds and tailwinds to this growth for FY24 as well as, 1 or 2 years after that?
See, when we look at Nifty in specific, or for that matter, let's say even India Incorporate.
mm,
There are some areas where there are some challenges prevalent at the current point in time. For
mm,
example, global growth is anemic, right? So businesses which are globally linked
mm,
are facing some bit of challenges.
mm,
Similarly, rural economy at the current point in time may not be in best of shapes.
mm,
And consequently, those businesses which are related to rural side of the market are facing growth challenges. Having said that, we believe we are in a very, very sweet spot at the current point in time,
mm,
where at the current juncture, we believe there is policy stability. Similarly, investment cycle in the country is reviving too. And it's only a matter of time that we will start to see bounce back in rural part of the country as well.
So if you see, you did say that, you're expecting a bounce back in rural, so maybe a little bit of the volume growth would come from there. But if you see the last 2 quarters, the revenue growth has been completely flat. I'm not talking of Nifty, I'm talking of generally India Inc. or even the Nifty 500 or whatever. So while lower costs have helped profits grow in healthy double digits. Now, in the coming year, so, can you more granularly indicate how do you see the demand scenario panning out, sir?
So see, the slowdown in revenue growth has also been function of fall in commodity prices that we saw.
Hmm.
So that has been one reason, and obviously slowdown on the rural economy side. After a point in time, we'll start to see those lower commodity prices in the base and rural also starting to bounce back. So next year, we believe revenue growth will be at least similar to profit.
Okay, by next year, you mean FY 25?
Yes, FY 25.
Okay. You're saying that revenue growth will be similar to profit growth. That's what your expectation is.
That is right.
Okay, sir. Okay. Now, so 2024, since, we are at the end of the year, this question is important for all investors. So suddenly we saw that post the recent Fed meet and the Fed commentary, equities in India especially have got a new lease of life. So post the recent Fed commentary and the recent numbers from the US and from India, so how does your 2024 outlook for Indian equities look like actually?
See, while sitting here in India, we may believe that post recent Fed commentary, India has done well. Many parts of the world actually has done well with respect to equity markets. Having said that, I believe India is a market where the setup is pretty strong. Structural tailwinds are pretty solid. And we are at a point where earnings growth is also kind of turning out to be at a level where we would think it is more appropriate. Margins have recovered. We have policy stability. Rural side of the economy also should start to improve. So while from market perspective, we may see markets reacting from one goalpost to another, I would believe Fed commentary doesn't change too much in terms of how India should deliver over a long period of time. We will continue to see such events playing out, but pretty confident that longer term India should do really well.
Okay. So we were recently talking of decadal low holdings by FPIs in Indian equities, but suddenly that seems to have changed. I think we've got flows matching that of 2020 as of say the latest numbers if you see. So now, how do you expect this FPI and DII and also the DII flows to pan out in 2024? Do you expect this situation to continue, especially because attractiveness of Indian equities has also increased?
So let's divide this between offshore investments and domestic investments. On the offshore side, I still see a lot of pockets where they are not fully invested into Indian market. They're still underweight as compared to what they should be.
Okay.
So over period, as India continues to be significantly larger as a percentage of world GDP, today we are fifth largest, and over a few years, over next 4 years odd, we should be third largest. The relevance of India will keep getting higher, and consequently, FII flows into the country also should get better. On the domestic investor side, I would believe overall allocation to equities as a percentage of total financial savings is still not a very large percentage. Can this percentage keep getting better as India gets into very strong cycle? We should see that. But having said that, is it going to be without volatility? Not really so. Because these flows keep reacting to market in the short period of time. But if one were to think about investments or flows from a 3 to 4 year perspective, pretty confident that we should continue to get domestic and international flows both.
Okay. And, so 2024 is also an election year. You do run the India entrepreneur portfolio at ASK, and you do have other portfolios as well in your organization. So how are you positioning your equity portfolios in the various strategies in view of the elections, sir?
Our thought process of investments don't change with these events. The whole idea is very simple. Buy into businesses where opportunity is secular. Buy into businesses where the business characteristic is very solid. Return on capital employed is very high. And management have track record or management have capability to navigate the external vagaries pretty strongly and have ability to increase market share across varied business environments. So what this does is, this does away with what is happening in the external environment from a single event perspective. So we don't want to take a single event risk into our portfolios, and which is why we kind of build portfolios which are really, really longer term. So at the current point in time, we have businesses where earnings growth is very solid and return on capital employed is also very high, significantly superior to what it is for markets as a whole. And in general, we have tended to avoid businesses where government intervention are relatively high. So these are really bottom-up ideation where strength of the business comes from within rather than external environment really providing these.
Okay. And you're saying you adopt a buy and hold kind of a strategy?
So see, every business has a certain merit. Till the time we believe that we'll kind of continue to compound our money from that business, we tend to hold on to those things. Given the fact that we look for secular opportunities, typically our horizon is generally longer term as compared to necessarily short term.
Okay. So in terms of sectors, when we all do an analysis, we do see that realty, capital goods, PSUs, autos, all these stocks in all these sectors have been top performing sectors of this year. So do you expect, valuation, there are pockets where valuations have expanded and there are companies where also earnings have caught up and valuations look reasonable in these sectors. So how do you expect the performance of these sectors to be in 2024? Are you betting on these sectors continuing or do you see new sectors taking over?
So what we believe is, many of these would encompass into either manufacturing or consumer or finance areas. We really believe India's manufacturing is coming to a point where we can actually get into some sort of virtuous cycle. Building manufacturing ecosystem takes a lot of time and we are on that journey already. So many of the capital goods businesses, many of the consumable businesses, many of the logistic, which is part of or which actually benefits when manufacturing does well. Similarly, manufacturing in India for India and for the world. So this is one area where we believe there lies an opportunity. While we may talk about capital goods, PSUs, realty, autos, many would get encompassed there. Similarly, the entire premium consumption or finance, these are areas where we believe should continue to perform. So overall, we believe domestic part of the world or domestic economy should do much better than what it is for those businesses which are globally linked. So we call these opportunity as domestic resurgence.
Okay, so your sectoral bets for 2024 would be on the larger manufacturing as a sector rather than, the more narrower segments. That's what you're indicating.
That is right.
Okay, okay. So, since you said you are avoiding sectors with global linkages, so, IT has recently got a new lease of life after the Fed commentary, although you kind of indicated that you wouldn't, go by the Fed commentary for an outlook on Indian markets. So now the world is still divided on whether the US will see a recession or not. So which side are you on, sir?
So, see, US economy actually has surprised pretty positively.
Mm.
When we started this year, the general view was US economy will get into recession probably in Q3 or Q4 of this calendar year.
Mm.
But performance has been pretty astounding, I must say.
Mm.
And most part of the US economy actually has done well.
Mm.
Whether it is the consumption side, or whether it is investment activity, or even government defense expenditure, that has propelled the kind of growth that we've seen.
Mm.
We really believe probably hard landing may not be the case. If at all, it is going to be either a low growth or soft landing, something like that. It may play out in the US economy.
Mm-hmm. So you're saying more likely that there won't be a recession?
Very difficult to say, but so far numbers don't show that.
Okay, okay, sir. And then India has had a tailwind from China being slow. So how do you see the China situation right now, and what is the good and bad for India Inc. as well as India equities from a slow China?
See, we believe Chinese economy has deep-rooted problems. Leverage also seems to be relatively higher. That effectively would mean that we may see some amount of dumping of, dumping may not be right word, but some amount of excess supplies from China to the world. And a slow China also has implication on global growth. So to that extent, we may see growth rates for world actually getting impacted a bit.
Okay.
This also means that many of the commodities may remain low in terms of prices. And to that extent, inflation may not be a very large worry unless services inflation starts to play a spoil sport. And also at the same time, India may be beneficiary of FII flows as well over a long period of time if China continues to remain the way it is. We've already seen how a share of China in MSCI emerging market actually has come down pretty meaningfully. So there are both positives and negatives, but net the way this China slowdown has played out at the current point in time, I would say there are more positives than negatives
for India. Okay. So, sir, the whole takeaway from this conversation, I understand, is that India is in a very strong position globally as we enter into 2024, and our domestic resilience will stand us in good stead.
Correct.
Okay.
That is right.
Okay, sir. So thanks a lot for this conversation. I'm sure the listeners will definitely get a lot of value addition from your views, sir. Thank you very much for joining us.
Thank you. Thanks a lot.